Let's talk about the 5 years. Let's kick off with that. Trends over the last 5 years since you did that interview.
Well, it's interesting. In the apparel industry, of course, 5 years ago, we were kind of at the point where Edcon had just been taken out by the private equity owners, or it was about to be taken out. I think that transaction happened about 5 years ago. And perhaps, well, certainly at the time, and in fact, I think in our history, it's probably the biggest single private equity transaction that's ever taken place in this country. I mean, the size of that transaction was a shade under, or just over 25 billion rands. And so that in itself was noteworthy. But what's happened since then is quite sad in a way, because whether it was a function of the capital constraints, the cash flow constraints, that arose post the transaction, or whether it was the international financial crisis that hit us in 2008, probably both of them, if we put it all together. But Edcon has, and the results are coming out later, I think on Wednesday, it's really lost market share every single year in the last 5 years.
So what's the cumulative effect of that in terms of loss of market share?
We haven't worked it out. We're going to wait for the numbers later this week. But so I'm not totally sure what it is.
But roughly, what would your estimate be?
I don't know, 3 or 4% maybe. But in a market, in that kind of market, it's a big number. But operating profit has hardly grown. Pre-finance costs has hardly grown during the time. Operating margins have come down. And one could actually argue that the business has probably gone more backwards than forwards during this time.
Remember when Steve Ross came in?
Yeah, he came, of course,
early 2000s.
Well, actually, before he came about 1997,
and he became something of an energetic force in the company. He was available for interviews, and he appeared to do a great deal.
Now, listen, Edcon was in deep trouble when he arrived on the scene. That's why he came, because the company was in such trouble.
And he seemed to succeed.
He did succeed, and he just believed in 2007, 5 years ago, effectively. He just believed at the time that the market was undervaluing his business. But then, of course, he didn't know what was going to come in 2008, with all due respect, and we can't blame him for that. But he believed the company was undervalued, and that's why he took it private, together with Bain Capital and what have you. But, of course, as we know, it's a zero-sum game. So we've had a few other players who've picked up significant market share during the time, because remember, whatever they lost has been gained by other players.
Let me guess, Mr. Price being one of them?
Mr. Price is one of them. Truworths has certainly picked up share, and I think if you go through the 5-year history of the now unlisted Pepco Group, they probably picked up a bit of share as well.
The other aspect with the retail shares generally is that we were saying the other day here is that they've been running quite hard. That they are, and someone might have been you, might have been someone else said, these are very good shares to have, but they're too expensive to buy.
But they're too expensive. Yes, based on the kind of valuation methodologies that we use, and I'm sure everybody else in the industry uses. As a generalization, South African retail shares are expensive. Of course, this obviously begs the question, why have the prices gone up? Obviously, the whole market's gone up, so, shares will re-rate in line with the market. There's an element of that. But there's another element, and that is, over the last 5 years, we're talking about retail trends. The percentage of foreign ownership of South African retail shares has jumped dramatically. We are now talking, it's not uncommon to find over 60 or 70% of South African retail shares being held by offshore investors. We're obviously excluding Massmart, where the figures probably 85 to 90.
Doesn't that make them vulnerable if we go out of fashion for whatever reason?
Well, it does, exactly. Because, whereas a South African investor would typically be happy to run down a holding over a period of time, a foreigner's general attitude is, listen, I want out, and I want out now, and I want out by the end of the day. It's as simple as that.
Let's talk about other trends, and that is online shopping. Now, online shopping, one understands with many things, but clothes, you need to try them on, don't you, and then pay for them.
David, this is a very interesting argument, and I had a debate with Ian Moyer earlier this year, I think it was early March, just about a week after he announced his results, or late February, whatever. And my debate with him was about this very issue. And the way I put it to him was like this. I said, Ian, I can understand if we're talking about a big brand, and you don't mind if I use a name, let's say Levi. I said, Ian, I can understand. I want a Levi 911. I want a 3630 in indigo blue. It's an international brand. It's an international product. I know exactly what I'm going to get. I'll be happy to buy it online. Very simply because I know I can picture it in my mind exactly what I'm going to get, and I know it's going to fit. But for a new fashion, high fashion ladies outfit, call it a dress, which I haven't seen because it only just hit the shelves, would I buy that online? I said, you know, my kind of gut feel tells me no. And you know what his answer was? He said, but you're wrong. They are buying it online. And the fact that we bring up this article, I mean, this whole subject matter, let's go back to an article that appeared in an international newspaper that's available in South Africa this very morning. Online shopping has hit 12-point-something% in the United Kingdom, which is currently the highest in the world. They mentioned in the same article that countries like Korea and I think Indonesia have gone over 10%. Australia has just gone through 10%, and the United States, I remember the figure was 9.8%. All these numbers are in an upward trend.
None of them are going to go backwards.
None of them are going to go backwards.
We'll have to stop there. That is Syd Vianello. I'm trying to imagine him buying a dress online, perhaps not a happy example. Retail analyst at Nedgroup Securities.